Welcome to the FTA tutorial videos on how to complete your VAT return. You've just watched our video on how to complete Box 6 to Box 8 of the VAT return. In this module, we'll explain how to complete Box 9 in the VAT on expenses and all other inputs section. The next section of the VAT return is headed VAT on expenses and all other inputs. This section of the VAT return is where you should declare the VAT you have paid to your suppliers on purchases, also known as input tax. Only the input tax which you are entitled to recover should be included within the VAT return. For more information regarding when you are unable to recover VAT, for example on costs incurred which relate to exempt or non-business supplies, or costs on which you are always prevented from recovering the VAT, please refer to the FTA website for further guidance. The first box in this section is Box 9, and in this box you should declare the value of standard rated expenses on which you are entitled to recover the input tax. The total net value of the standard rated purchases on which you are seeking to recover VAT should be reported in the amount column. This box should include the value of goods or services purchased for business purposes from VAT-registered suppliers that were subject to VAT at 5%. Goods or services which were purchased at a discount. The total price that you have paid for goods purchased which you are selling under the profit margin scheme. Goods or services purchased before your tax registration became effective on which you are able to claim the tax incurred. The claim must be made in your first VAT return. Reductions in value due to credit notes received from suppliers, and errors that you are allowed to correct for previous tax periods. This will apply where you have discovered an error where the payable tax is less than required by 10,000 dirhams or less, and you discovered the error in this tax period. If the tax value of the error you have discovered is more than 10,000 dirhams, you should submit a voluntary disclosure in the tax period in which the error was found. But it should not include wages and salaries, money put into and taken out of the business by you, purchases that were purely for private or personal use, expenses where the input tax is specifically disallowed, such as entertainment costs, motor vehicles which are available for private use, and any other costs which are put to private use, expenses which were incurred to make wholly exempt or non-business supplies, exempt or zero-rated purchases, purchases of goods located within designated zones which are not consumed in the designated zone or subsequently imported into the UAE mainland, gifts or donations of money freely given for nothing in return, purchases from members of the same tax group, fines and penalty charges received, e.g. traffic fines which were not subject to VAT. Please also note that purchases which were subject to VAT under the reverse charge mechanism should be recovered in Box 10, not Box 9. The VAT amounts relating to the net value of expenses and inputs previously included within the amount column should be included within the recoverable VAT amount column. This should only include the VAT you are entitled to recover, not the total value of VAT you have incurred on all costs. For example, if you have incurred 1,000 dirhams of input tax which directly relates to the making of exempt supplies, this input tax is not recoverable by you. You should not include any amounts in your VAT return. If you incur costs which were used to make partly taxable supplies and partly exempt supplies, you should include the total net value of the cost in the amount box and only the recoverable value of VAT in the recoverable VAT amount box. In the adjustment column of Box 9, there are three types of adjustments which should be included. The first would be any adjustment relating to input tax previously recovered on purchases where you haven't paid the supplier of those goods or services for more than 6 months after the due date for payment. Given that you haven't paid the supplier, you are no longer entitled to the VAT you recovered on the supply and should repay it to the FTA in the adjustment box. if you later pay the expense in a subsequent tax period, you will be able to reclaim the input tax on the VAT return for that tax period. The second type of adjustment which could be included would be an input tax apportionment annual adjustment in cases where you are a business which makes a mixture of taxable and non-taxable supplies. The input tax apportionment annual adjustment is due to be made in the first tax period following the end of the tax year. So, you would be expected to include the annual adjustment on this return if the VAT return period reference number at the top of the VAT return is period 1. The adjustment should relate to the tax year which has just ended. The values included within the adjustments column may either be positive or negative values. For more information on completing your input tax apportionment annual adjustment, please see the FTA website for guidance. The third type of adjustment which could be included within this box would be adjustments under the capital assets scheme. If any of your capital assets are eligible for the capital assets scheme, then the input tax incurred in relation to that capital asset should be adjusted in each tax year, according to the provisions of the VAT legislation. Again, further guidance is available on the FTA website. You have now completed Box 9 of the VAT return. Watch the next video to learn how to complete Boxes 10 to 14 of the VAT return.